How can I decide what mortgage is right for me? Well, the first thing you have to do is decide how long you want the mortgage for and for what purpose. If you simply want a short-term mortgage and you just need it for a short period of time until you sell some other property, you may consider obtaining what they call a home equity loan, which can be closed fairly quickly and without a whole lot of paperwork or closing costs. They're offered at right now a very low interest rate. Usually it's an adjustable interest rate, and so you can borrow money and use that for a short period of time and then pay it off with minimal closing costs. If you're buying a home and you anticipate staying in the home for some time, and then you would look for a 30-year fixed rate mortgage and find out what the payments are. If you would like to get out of debt quicker, well, then you could ask them what's the interest rate on a shorter term loan, such as a 15-year fixed rate loan. If you want to try and keep your payments low for the initial period of time of say two years, you can talk to lenders about a adjustable rate loan. In fact, over the course of time, I think adjustable rate loans have proved to be less expensive than fixed rate, but most people like to have the peace of mind knowing that their mortgage interest rate will not go through the roof, and so that they will be priced out of their home. So a lot depends on your financial wherewithal, what your income is, and what you can afford to pay, and how quickly you would get out of debt, and for what period of time you would like it. If you're dealing with investment property, that's usually you want to try and get the low interest rate for a longer period as you can, and with the right to prepay your loan, which you usually can negotiate, or that's usually a factor that is included in most notes and mortgages. I will say that presently the underwriting requirements for mortgages has gone up substantially, so it is very, very time consuming, tedious to obtain a mortgage from an institutional lender, no matter who you pick, and it takes a lot of paperwork and a lot of patience, and usually takes you probably about 45 days to obtain a loan, even if you have good credit and the property appraises for the amount that you're purchasing it for or what you're attempting to refinance. Usually you can obtain a mortgage at 80% loan to value and not have to have any mortgage insurance. However, if you have a small down payment, well, then you might want to explore getting an FHA loan or a VA loan, which will require up to 3% down payment. However, built in both of those loans will be some mortgage insurance. Or if you just get a conventional mortgage with mortgage insurance, you can get a high interest rate, high percentage loan to value loan. But it is going to take some time and patience. So if you have any questions, well, give me a call at 727-847-2288.